Rajendran Nagarajan wants to know if gold would be a better option than a short duration fund due to the rising inflation, and how is the metal likely to react?
Yes, that is the theory that gold should prove to be a great, much more stable and rewarding thing when you have the interest rates go up and uncertainty. You this turns out to be a safe haven. But that is the theory. The real situation is that gold has proven to be very volatile, and variety of reasons contribute to its volatility. The demand supply situation changing, uh, central bankers buying and changing taxation rules. Many a times, different countries do clamp in, including India, where we have the now customs duty on import. And last year, we have been a sizable importer of gold. In fact, gold has, I think, turned out to be the largest item of import in India. So that is quite scary. That's very disappointing for the government when the government is working hard to financialize and actually free the assets. Government dislike gold as an investment simply because it is a relatively unproductive asset. When we buy bond, it goes into productive assets. When we buy shares, when we buy equity mutual funds, the money is buying equity, but ownership, which actually the factories, the industries, the services. But when you buy gold, you actually buy it and keep it in the locker, and it stops working. So in that sense, governments discourage. But I won't be surprised. The current context contributes far more heavily to the volatility of gold. I would say keep it simple. Be into short-term and ultra short-term debt fund. That's a way to navigate the likelihood of rising interest rates.